There are only two ways to trade CRT. The first way is trading reversal CRTs, and then the second is trading continuation CRTs. So what's up guys, welcome to this short video on how to trade reversal CRT. So if you are a CRT trader or you're someone just starting to trade CRT, I've made tons of videos on this particular topic, so you can check it out on this particular channel. So today we are going to be talking on reversals, how to trade a reversal CRT. Now when I say reversal, this actually means that you are trading against the current trend, right? And there are some things you have to put into consideration, or some things you have to check first before you start looking at your CRT. Now first and foremost, before you can have a reversal, there are only two ways that a reversal can happen. Either it hits what, a key level, all right, it hits a key level on the higher time frame, or a big figure, right, or a big figure. Now this can happen only if price have traded above previous price action. Let's say this is the highest high that Euro USD has ever made. If at top now price trades up and it's around this area, then we don't have any past price action that we can look for a key level and expect a reversal from. Then at this point you can now start looking at big figure levels, which are institutional numbers, right, like this one where you have 1.200. Now this will be big figures where you can expect a reversal from, but when price is still within all old past price action, you can only have reversals on key levels, and these key levels are going to be areas coming from the higher time frame. So first thing to note when you want to trade a reversal, or when you are looking for a reversal in the market that's trading against the current trend, then you have to start with the higher time frame. And in this case, I want us to look at study this example on Euro USD, starting right from the monthly time frame. Now when you look at the monthly time frame, we notice something here which is very important. We had a PDRA, which is one of the key levels, which is a fair value gap, right? We had this fair value gap on the monthly time frame. So this means that we have already identified a key level. All right, we have already identified this key level, which is an FVG. Now remember I said there are two key levels. It can be any PDRA, either an order block, fair value gap, breaker block, whatever PDRA that you can have on the higher time frame. And if price have traded above previous price action, like you don't have any past price action to look out again, then you can start looking at big figures. So first we already have our key level here, which is a monthly fair value gap, and price has traded nicely into that key level. So what we have to do now is step down to the lower time frame to try to get price action, or how to be able to spot our entry, all right, as a confirmation to this area. Now also I've made so many lessons on how to spot good CRTs. Spotting a good CRT comes for you to get a good CRT, it should be coming from a higher time frame key level, just like what we can see right here. We have a key level that is supporting price. Now most strategies, or every strategy, for it to be consistent, you must always have key levels. Either your level is like a support, resistance, or trend line, you must have a zone where you feel like price should react from this particular area. So this is where we have, which is our higher time frame key level, which is the monthly fair value gap. And now you can see that the daily was actually in an uptrend into that particular fair value gap, right? Now at this point, since we are the monthly, which is in the the daily chart, which was in an uptrend into that key level, at that point now we are expecting a reversal. Right now, remember I also said there are two types of CRT: continuation and reversals. Like for example, price was being drawn to this CRT, right? Before that, we can see that we had multiple continuation CRTs. That's CRT in line with the direction of the market. We had multiple continuation CRTs, which price was creating for us in line with the current direction of the market. But at this point now, we are expecting a reversal. So we are now looking for a reversal signal. Right now, you notice that price took out these highs, which was sell side liquidity, buy side liquidity here. So we have a total soup at this point. Now price has taken out this liquidity. What next is taking out liquidity into a key level is one of the most important things that you should always look out for, because for the market to actually reverse, it needs to generate that liquidity. It needs to grab that liquidity before it starts going the opposite direction. And then as of this huge candle, we notice price taking out the candles high into this key level. Now there are so many ways to trade this CRT. We have CRTs. You can trade the second candle of a CRT, you can trade the third candle of a CRT, but I want us to focus on this one, which is the most consistent. This one is actually for advanced traders, and I think I will make a video on it, on how to catch this type of entries like that. But for us today, we're going to focus on this one, which is the most consistent and the easiest one to catch. That is trading the candle 3 of a CRT. Okay, now even at this point, I don't always limit my take profits on these areas, all right, because at this point I knew that, okay, if we're having a reversal here, the market is coming back for internal range liquidity, and in this case is actually this low. And I think I shared this setup on our Telegram channel. I'll attach the picture of it here so that you guys can see. Now at this point, we have price tap into our key levels. Remember, we are expecting a reversal, right? We are expecting a reversal. So price closing below this candle validates it to be a CRT. So which means this second day, which is a Thursday, we are going in to look for lower prices down to this area. Already, this is a confirmation that price is respecting this key level, all right? And we are trading now a reversal CRT. Now with this confirmation, we already have a daily CRT high. We already have a CRT high for the daily, and then as well we have a CRT low right here. Now let's move down now to the 1 hour. Also, you need to know how to trade, how to fluctuate between time frames, right? If you are plotting a daily CRT, your end more the one entry should be the 1 hour. Okay, let me just put that here. If you want to trade a monthly CRT, you should be looking at the daily, right, as your entry. Okay, and then if you are trading the weekly, CRT, you should be looking at the 4 hour to get your more than one entry, right? If you're trading the daily CRT, you should be looking at the 1 hour to get your more than one entry. If you're trading the 4 hour CRT, you should be looking at what? The 15-minute as your more than one entry. Okay. If you want to trade the 1 hour CRT, then you can go down to the 5-minute and even 3 minutes to get your more than one entry. So we are trading the daily CRT, which means we're going to be looking at the 1 hour to get our more than one entry confirmation, right? So we drop down to the 1 hour. This time frame is very important. If you are looking at the daily CRT and you are looking at the 1 minute to get your, or you are the 5 minutes to get your entry confirmation, so you have more than one confirmation, you can take a couple of losses before you finally get the right more than one entry. So it's always good to know the time frame you are looking at first. All right, so looking at this is our daily CRT high, okay, and then also this is our CR low. And remember, this is our original target. Remember, I said most of the time you should not just limit where you're targeting if actually you knew what you were doing, right? Now at this point we had price taking out the CRT high. This was actually based on news. All right, this was on news, and then after that, what happened? Price closed below the that bullish candle right there, which is our more than one entry. So this is already our more than one entry. Okay, this is already our other block entry right here. Now in this case, you can decide to get in directly from here, and then your stops will be above the other block candle that you choose. You have more than one entry other block, right? And then either you're targeting this CR low, or you're targeting the original draw on liquidity, which is the internal range liquidity. It's just something like this. This is what I mean. If the market is pushing higher, right? If the market is pushing higher and it hits a key level, if I want to sell here, I'm going to be targeting this low, right? This is the low I'm going to be targeting because I'm now expecting a shift in market structure, probably a pullback, and then further push to the downside. That's why that's why we are not just targeting the CR low here. We are targeting the original low right here, which is the same as this one here. Okay. Now, also you can take partials here and then you hold for price to come take that low. Now, again, if you are not very comfortable with this price action here, maybe you feel like price might want to push higher again like that, maybe before going down, it's still your feelings are still actually valid, right? And then what you will need to do now is be patient, wait for price reaction now on this key level before you get your entry. And something happened here. We had a double CRT confirmation here, which is actually one of the best things I love to see when I'm trading at a key level. This is the same thing. This is a key level and this is a CRT candle into it. So this is actually now another reversal CRT happening here. So at this point, this is your model 1 entry. This other block, price closed below it. The moment price close below it, you get in on the next candle right away, right? Now, I know some of you prefer to wait for price to retest. Most of the time, price will not, depending on the volume that we are having at the moment. So if you were someone that did not want to enter directly after this model 1 entry, then you wait for this to happen and then you take your trade and then you target the sell side liquidity. All right, now this is quite simple, but now the main things I wanted you to take back to backtest on this lesson was, first, if you were trading CRTs, know that there are two ways. Okay, there are two ways to trade CRT. We have the reversal way, okay, and then we have the continuation. And now if you want to trade the reversal, all right, you have to be focusing on what? PD arrays. You have to be focusing on PD arrays, and these PD arrays, we have PD arrays and we also have big figures, right? Big figure numbers, which are institutional numbers. Okay, now with this one, this is for your reversal. Now with continuation, you have to focus only on PD arrays. Okay, you focus only on PD arrays. PD arrays here can be order blocks, fair value gaps, breaker blocks, and so on, because you are trading in the direction of the market. Okay, and then at that point you are trading based on internal range liquidity. This means if the market makes a high like that and it's pulling back, this is where you can spot a CRT. Okay, you may definitely see a candle around this area where you can use that candle now to get your CRT. Probably you have a key level here, okay, and then price creates a CRT here for you. It takes out the low of this one, okay, and then you trade that confirmation. Now you trade a third candle to make another high. So this one, you are just focused on PDRs because it is happening within the trend that you are following, right? But when it comes to reversals, you are using PDRs. Now your PDR here also can be an old high, all right, especially on the weekly. Like for example, what we had here on Euro USD on the weekly time frame, you could still trade this based on price clearing out an old high like this. All right, so PD arrays, when it comes to PD arrays, we have other blocks, fair value gaps. We also have old highs and lows based on higher time frame. Okay, because price creates that liquidity, which is external range liquidity, will definitely be coming back for internal range liquidity. All right, now those things are very important. They are very important. Now I do not want to make this video to be long, but keep in mind, if you want to trade reversal CRTs, you have two main things to identify. First, which PD array are you expecting price to reverse from? Is it a big figure or is it a key level, maybe coming from the higher time frame? Like for example, if we're looking at gold currently now, you will notice that gold is trading where we have all-time highs, right? You can see on the weekly here, this is the highest point gold has ever traded up to. So at this level, you cannot really know which PDRA to use here because you don't have any past price action. All you have to do now is to be looking at what round figures, like what we have here. We have 3,900, we have 3,900, and we also have 4,000. So if you're expecting, if we see gold trading up to 4,000, at this point there is high probability that we can have a reversal, right? Even if it's a pullback, which means maybe if price trades like that, and then we have another candle raiding the high of the previous one, and then tapping into that key level, tapping into 4,000 big figure, then we can have probably the next candle pull back to the downside, which is now your candle 3, right? So this is how you can trade a reversal when you're using round figures or institutional numbers. Why? Because people are targeting these areas to sell off what they bought, right? So if people are selling off what they bought, who are they selling to? Definitely people are buying it, right? So at that level, price should give us a nice reaction, just like the one we had here. This was around a big figure, which was 3,500. All right, this reversal here, which was actually a pullback, because as of this point, this was also the highest key level that price traded into, which was 3,500. All right, so we had this CRT here. I actually traded this CRT, all right, because this was also a key level, 3,500, but this did not mean that we are expecting a complete reversal, because at this point when gold is moving higher, it can move like that for quite a long time. But since we're expecting pullbacks, this is what we can have. We can have trade this reversal, we can trade this reversal CRTs, but keeping in mind that we are still in a bullish market, which means that we still have to identify mostly key PDRAs that are bullish. Like for example, we had this fair value gap here, and then at the end of the day, price still continue to the upside. All right, you will still expect price to respect bullish PDRAs. Now when price starts to break, when price starts to violate these PDRAs, that's where we are now starting to have a pullback. Like for example, let's say that we have this fair value gap right here, and then suddenly next week price starts closing below that fair value gap. That is a sign that we're probably gonna have a deeper pullback, maybe now to retest these highs and stuff like that. All right, so that's it about this lesson, guys. I do not want to make it long. Please, if you're new to this channel, consider subscribing, and for those of you that are already subscribers, this channel is where it is today because of your engagement. All right, so if you have any video requests or any question you have, put it on the comment section and I'll make a video to clarify that. All right, so thank you guys so much, and see you on the next video.